Hi everyone, this is your Tampa Bay Realtor, Lance Mohr, and in this video, I want to talk about FHA loan requirements, and more specifically, if you're getting an FHA loan and you have bad credit. Because I know a lot of people out there that are watching this are going to get taken advantage of by lenders and literally costing them thousands and thousands of dollars, so I want to give you a heads up so you don't get hurt. All right, so let me just tell you a story what happened, and this is really gonna drive it home for a lot of you out there. What happened is a few months ago, I had a client that called me. She wanted to buy a home, but she couldn't because she had some bad credit. She needed to restructure, pay off some debt, get her credit score higher. So she went to a mortgage company, and the mortgage company said they were going to work on her credit, and they did. A few months later, she ended up calling me up. She could get a loan. She bought a home, everything was good. Her and her husband were absolutely stoked, and it was a good deal. Well, what happened is I got a hold of the good faith estimate because I wanted to see the good faith estimate that they gave her, and I was shocked in what the interest rate was. The par rate was about, and when I say par, I'm talking the average rate on an FHA loan. Now, one thing, just keep in mind, FHA stands for Housing, the Federal Housing Administration, and it's a department in HUD, the Housing and Urban Development, just so you know. So I took a look at it, and the average rate going around was about 4%, and her rate was, I don't know, something like 5 1/4. It's really high. It's over 5%. So instead of calling the buyer, I actually picked up the phone and called the loan officer. And I introduced myself and I said, "Hi, my name is Lance Mohr. I'm a real estate agent. I'm representing the buyer. And I know you've been working on her credit. And I just wanted to follow up and see why is her interest rate so high." And she said, "Well, because of her credit score." And I said, "Okay, well, but why is it 5%? And she said, "Well, because she doesn't have a very high credit score." And I said, "All right, but this is an FHA loan. In other words, HUD is insuring the loan of default." And she said, "Well, when we get people between 580 and 600, they'll have one credit score, 6 to 620, 620 to 640, etc. Just really depends on their credit." Now, this would make sense if this was a conventional loan, a Fannie Mae or a Freddie Mac, but not on FHA. And I told her, I said, here's the thing. I said, whether her credit score is 600 or 625, HUD is insuring the mortgage. So there's no more liability to your company whatsoever because the mortgage is already guaranteed of default. If it defaults, it's covered. So you don't need to worry. And she said, what we do is when you have lower interest rates, then we have different, if you have lower credit scores, we have different interest rates for you. And I'm like, man, what a crock. So of course I get off the phone, I'm talking to my lender, Jeff Hoffman, and Jeff and I just couldn't believe what was going on. And of course he was on the same page. He said, "Lance, you got to be kidding me. If they could qualify for an FHA loan, they could qualify for an FHA loan." Now, I'm not saying if you have super low interest rates or super low credit scores, I'm not going to get into this, that you might have to put down more money down, but it's not really going to affect your interest rate. So what I would say, if you're hearing this from lenders, it makes sense. And if you're on a conventional loan, a Fannie Mae or a Freddie Mac, completely. And I'm not saying that this lady that I spoke with on the phone, I'm not saying her company did not do that. I'm sure they did. And if that was the only company she's ever been with, she would probably not know the difference. And actually, we got into it a little bit on the telephone because she was telling me I was wrong. And I said, well, I just happen to have HUD's 4155 underwriting manual. I said, if you would like to point out to me in their underwriting guideline manual where it states this, then I'll believe you. Of course, she was shocked and she couldn't do it. And so if you do have poor credit scores, maybe you have a 585 or a 620 or a 632, then what I would do, if they're telling you your interest rate is quite a bit higher, so maybe the going interest rate is at 4%, they're trying to tell you that your interest rate is going to be 4.75, well, I would definitely call a lender, because here's the kicker, and here's the thing. When you get in doing the loans with banks or bankers, they don't have all the disclosures that brokers have. So they could basically, I don't want to say rake you over the coals, but they could basically rake you over the coals. So I would definitely look into it. I would get a good loan officer who's honest and fair. Again, if you're in the Tampa area, if you're in the Florida area, I'm going to put a link above to Jeff Hoffman because he's fantastic. I have no squeeze in the game. I don't own any of his mortgage company. He's just going to treat you fair. And if you're in another area, if you're in another state, find a loan officer. If you're going with a builder, you have to go with a certain company, do your due diligence and just understand how FHA loans work if you don't have great credit. I hope this helps you. Give me a thumbs up if you like this and share this with your friends, because a lot of your friends may be under the same situation and they may be getting taken advantage of. So share this on Facebook with your friends. Let other people know about it. I hope this helps you. Have a wonderful day.